Good evening, everyone. This is George from GettingMarketMoney.com with today's Currency Corner on September 1st, first day of the month. And I'd like to remind everyone that the smart money is coming off of holidays and vacation. They're sending their kids back to school, and we will resume liquid trading within the markets. It has been rather thin in volume recently, the past couple of sessions, but we still have seen some great trading opportunities set up. So let's discuss those. First of all, I'd like to point out also that September and October seasonally have been the worst months for markets in terms of equities. They're the best for the bears and the best for gold. The gold bugs, the traders, the investors alike, but they have not fared well for equity markets at all. So just a recap of today's news for the USD. Non-farm employment change came out at negative 10,000 jobs. Expected to be at 20,000 positive. So it is a expectation to the negative side. And ISM manufacturing, however, at 10 a.m. came out positive 56.3 versus 53.2. So just to recap that, 10,000 private jobs were lost, yet manufacturers are more optimistic about production in the future. Unless there's technological innovation, I don't see how those two line up. However, we're trading in markets that at times don't make sense, so keep that in mind. Those are the statistics. All else being equal, this should have instilled a little bit of bearish to the markets. However, recently, that's all the markets have been giving. So I felt myself yesterday's session that it was overdue for a bit of a rally. We got the rally today, and boy, did we get the rally. We had the S&P up almost 3%, Dow Jones up 2.54%, NASDAQ 2.97%, and TSX 0.75 of a percentage point in the green. All equity indexes and the North Americas were up and up strong. On the commodity side, gold is holding around the 1248 range, dropped around $5, and oil is down slightly at 73.83. and decreasing. Oil is in a bearish trend. I'd love to do some analysis on it, but I don't trade oil with the public, spectators, I should say. I do trade on my own account. I don't want to advise or give analysis on it, but it is tied positively. It's positively correlated to the equity markets. So I'm bearish on those, and I'm bearish on oil. I have no choice. Let's get to the chart we're looking at here for the past 2 minutes and 50 seconds. You're looking at Euro USD on the weekly time frame, and what you're seeing is not a pretty picture. It is a downtrend. It's setting lower lows and lower highs as well. Sorry about that. I'm just pulling up the tools here so you can see. There it is, lower low and lower highs. That's a downtrend to me. Fibonacci's from this point to that point signal a retracement back to the 50%, and EMA support, or resistance in this case, the downside is forming here around the 50% as well. I would sell in this range if I was to sell. That's far away, keep in mind, and we may not get it. Markets are never perfect, but overall I'd like to say the euro is bearish in my eyes, and the US dollar is going to go higher towards the last few months of the year, the last quarter. The reason being, traditionally, when equity markets are sliding, the US dollar finds strength because of safe haven status and a number of other economic factors that are beyond the scope of the Currency Corner, but I urge you to read up on it. The dollar as a safe haven. Why? Positives, negatives as always, etc. But that being said, we're going down. There is formable here resistance, at which point it took a plunge right afterwards, so it has reacted to that point. On the break of 126, which is a white line here highlighted, I will look to go short. However, keep in mind there's quite a bit of resistance to that downtrend around these levels. So that break will signal to me we're back in the downtrend. I look to go short in this. In a downtrend like this, where you see lower highs and lower lows, I'm not brave enough to enter into a buy. If you are, that's great for you, and I wish you the best luck in that trade. But myself, I don't recommend it, and I don't do it myself. So I will wait for a break of the 26, 1.26 that is, and short some units in there. If you look at it on the daily, it shows a picture a bit more magnified. What we see here is much the same in terms of indicators. Tested the 200 EMA, bounced right back down. Right now it is on the lower part of the Bollinger Bands. It's reacting to that level, as you can see this tail. We did get a bullish candle on the daily, a good day for the euro. However, every trend needs to take a deep breath and as it fights to stay afloat, but it's going to sink and test that 26. As we mentioned on the break of the 26, you'll see it drop, pop back up to 26 as usual, and ride it on down to the 121.70 level, as highlighted here. That's how I look to trade this Euro USD pair. I'm not saying it won't go up to 131 before bouncing back down, but as I said, I want to see the break of 126 or a test of that 131.77 to short. So I wish I hadn't made the chart so messy, but I'll switch color just to indicate I'm going to short here or here. Anywhere in between, anyone's game. I'm not interested to play. Moving forward, we see SPY, that's the ETF on the S&P 500 daily chart. Much has been said today about the rally, the renewed bullishness, optimism, a lot of theories out there. That's great. I can't deny that that's a giant bullish engulfing candle here. I really can't, but I mean, if you look at the volume, it's steady volume. It took a run down 3 times towards that low, didn't break it, so we had a range effectively. When you have a range, ranges are broken, and it's the case here. Sorry about that there, guys. I had to press pause for one quick second. As you can see, it popped back up bullishly to 108.46. It's a very bullish movement indeed in price action, but overall, it's just a mere jump to the 50 EMA. It was due for some correction. We can't continue to plummet at that pace. And apparently I'm getting a cold. So that's out of the script. It wasn't in there for tonight, but unfortunately I had to pop it in there. S&P 500, am I bullish? By no stretch of the imagination, I'd actually like to go short. So that being the case, I added a few put contracts today. We'll see what happens tomorrow. Nothing that I want to take too much risk on. I've already enjoyed a nice slide. And those following Currency Corner got to get in at the 110 level. Just highlight that. Got to get in at this level. And I mentioned it would go down to 103.50. Hasn't quite gotten there yet. However, 104 is close enough, and we got our initial target. We should have locked some profit in. Sorry about that. We should have locked some profit around here. If you got a chance to do that, great for you. If not, it's around the 50 Fibonacci from this point and this point. So we look to see some resistance here and continue back down to the downtrend through the months of September, October, and November while long with gold. I'm going to cut it short here, unfortunately. It's all the charts we have for the day. That's GLD. However, I'm not feeling too well here. I'm going to have to cut it short for you guys. Just a quick analysis. You can see the support. Gold's been rallying. It's been on a decent rally on consistent volume, and that we like. However, as you can see, we're reaching a bit of a resistance point here. And I guess you could see a triple, quadruple top forming. We'll slow down before popping back up. Now remember, these are all-time highs, so you might see a little greater resistance than usual. Might see it slide back down to the 118 level and then continue on higher. So that's gold, and we're out of time for today's Currency Corner. Have a great day trading. It's been George from GettingMarketMoney.com. Please don't forget to join. As a member, there are some additional functionalities, as well as commenting and some sections that are not available to the public. So that's all. I hope you join in and have yourselves a great trading day tomorrow. And don't forget, always get that market money. Take care.